Greetings, and welcome to another educational video of the Independent Funeral Directors of Florida. This is all part of the introduction of I-Succession. My name is Daniel Isard, and I'm the founder of the Foresight Companies. And over my career, I've been involved in hundreds of funeral home and cemetery transfers. During that 40-year period, I've learned a lot, and I'm honored to help the IFDF create I-Succession. Allow me to begin this video with a reminder of the purpose of why the IFDF is spending its time and resources to create I-Succession. I-Succession is a game changer. By creating I-Succession, the IFDF is helping their members do two critical things. First, be financially and intellectually prepared to make good decisions when it comes to their business succession. And help promote private ownership of funeral homes in the state of Florida. To do this effectively, IFDF has entrusted me to create an educational path for its members. The more you know about the decisions that have to be made in advance, the better decisions you'll make. Therefore, the better outcome you'll have. Through these videos, blogs, and presentations at convention, we can help you learn what those options are so you can decide which path you want to take to your own business succession. We have identified a trusted set of advisors as a recommendation for you to use, but you can also use any advisor that you want. Your advisors may need a colleague to come in and help them. Not everyone has been involved in the transfer of funeral homes. This team can provide the services you need or complement your existing advisors. In this video, I want to introduce you to two people that are part of our team of advisors. Shannen Mayfield and Dave Snyder of Federated Fiducial are available to provide transaction support, valuation, accounting, tax, and other services that Federated Fiducial offers. Remember, I-Succession is about helping business owners be prepared for the business succession or helping them acquire other funeral homes to build their funeral business. Whether you're going to transfer your business to a child, a key person, another IFDF member, a third party, or if you just want to be prepared and not make a decision on what path to take, I-Succession is there to help you. In the event you want to buy, the same team is there to support you. I'm talking with Shannen Mayfield and Dave Snyder of Federated, longtime accounting firm, working with funeral homes nationwide and working with many IFDF members. Shannen and Dave, thank you very much for being with us today. Shannen, give me a short synopsis of your background, if you would, please.
I am a CPA licensed in Illinois, and I've been working in the accounting industry for 25 plus years. Been working specifically at Federated for a little over 10 years now, focusing in the funeral industry. I specifically work on tax, transactions, and valuation work.
Dave, tell us about your background.
Hey, good morning. I'm Dave Snyder with Federated Funeral Directors. I am the accountant that grew up on the second floor of the funeral home. Today, my main focus as a field consultant is to improve the the cash flow of the funeral home, and primarily that focuses on budgeting, identifying the key performance indicators, the cash reserves, monthly disbursements. I'm developing the budget for profit, identifying the net operating cost by the method of disposition, be that burial or cremation, recommending the proposed service fees on the component pricing for the general price list, merchandising mark-ons in the selection room, and that's pretty much where it starts.
Shannen, I'm curious, with your background in valuation, obviously valuation is a big part of any transaction. Can you identify 2 or 3 things that are very important for the valuator to understand about the business?
There's certainly a lot of things, but I think some of the key items are understanding the nature of the business, specifically things that are unique, for example, to the funeral industry. It's also important for the valuation analyst to really understand the cash flow of a business and understand the value of the assets, both as they're included in the operations and ones that are not included in the operations. It's important to make that distinction. Really, the key to the valuation is the cash flow, and having a valuation analyst that understands what numbers need to go together in order to determine that, I think is important.
Dave, with your work more in the field and than Shannen's work, you've seen many transactions. What are some of the cautions that you would make sure your clients are aware of?
The number one concern is the value of the business is not determined by the seller's retirement needs. Second piece of advice I would give you as the seller, in order to maximize the cash flow value of your business, we need to take our hands out of the cookie jar 3 years prior to the valuation, because for every dollar that you're sliding under the table, and I'm not here to judge, but everybody does it, every dollar that you take out of that business in personal expenditures is going to cost you north of $6 on the valuation.
Can you give an example of some of the things people run through their business that either as a valuator or as a hand-holding consultant, you have to caution people about?
A lot of times we'll see people using the corporate credit card for a lot of personal expenses, even fuel. Yeah. And although it's small dollars here and there, it can add up. We see large expenses too. I one time did a valuation and explained the results to a client, and they were outraged that I got such a low value. And they said, Shannen, I know it's worth more than that. I paid for all 3 of my kids to go to college out of there. Mm-hmm. So that tuition would be an example of something that maybe not appropriate to run through the business, especially in the years right before you want to have an analysis done in order to get the value of the firm. We see, again, like Dave said, we're certainly not here to judge, but it's important to have a clean set of books before you go in to get a valuation, and be honest with your valuation analyst. If you do have discretionary items that are going through there, you need to be able to identify those. Placing
a new roof on the horse barn is not a good idea running it through the business. No, seriously, the items that most business owners are going to run through the business, we all know about. It's generally going to be your automotive expenses. And, if you're running your wife that is not active in the business, and your children and your grandchildren's automotive expenses through the business, that's going to detract from your cash flow value. Your cell phones, your health insurance, all this kind of stuff is going to come out when you transition ownership anyway.
Shannen, as a CPA, what are some of the reasons why Federated and you have an advantage for your clients than someone who does not specialize in the funeral world?
Well, the funeral industry is very unique, and there are some things in accounting that are just basic, but there are other things in a funeral home that, if they're not understood properly, I think can lead to a significant issue in selling a business. A prime example of that is going to be pre-need sales. So we all know that that's not income right now. However, someone outside the funeral industry is not going to understand that. And so they're going to see that as, oh, look at all this cash, look at all these sales. And if they don't understand the funeral industry and they don't understand that that's not guaranteed money and it can't be touched for a while, and there's no guarantee it's going to go to that funeral home, they could try to include that and escalate the value, which the seller may think that's great, but the incoming buyer, number one, is not going to be able to get financing, and number two, would never be able to pay for a business if it shows an inflated value because of a misunderstanding like that. It's a common misconception. I did a court case a few years ago, and the it was a divorce, and so the soon-to-be ex's attorney tried to say that the funeral home's books were, they were understating, they were committing fraud, understating revenue, and it was because they thought that the pre-need should be included in that. So it's a very common misunderstanding, and that's just one example of, I think, a few key things.
Dave, what are some of the examples that you've seen that make Federated a special advisor because of your communal knowledge to this business?
Well, you got to remember that Federated started in this industry in 1925. We are the keeper of the statistics. It's very hard for a firm in a peer group to operate materially less expensively than everyone else. So what does that tell you? At least we have a working knowledge of what we think your operating cost should be and your net operating cost per burial, per cremation. And literally, we have the budget for profit. We know what your cost of goods sold should be, the 8 major category operating expenses, and the line item details that make those up. So it's very difficult to find something that you're doing that we haven't seen or could not propose options to correct it.
Shannen, is there any general advice that you would give to IFDF members when they get ready to start planning for this transaction?
Absolutely. One of the key things is ensuring that the transaction is structured properly. The seller and the buyer have very different wants and desires, and the tax implications are something that can have a big impact. Ensuring that this transaction is structured properly so that it minimizes taxes, but also doesn't negatively impact the buyer. As far as for a seller, I think it's important that they look at what the after-tax implications of that transaction are, because it is possible for someone to sell their business and end up walking away with very little cash, and that's not the goal. So it's important to make sure that the tax implications are understood and thoroughly looked at, and then also steps before that, you want to actually have transaction plan so it minimizes those tax implications. When you're selling that business, you pay the minimum amount of tax and walk away with the most cash.
We live in a net world, not a gross world. Dave, any general advice that you would give to IFDF members when contemplating planning for either being the seller or the buyer?
I think the most important component of the transaction is identifying your potential successor, be that a child, a key employee, and if that's not an option, possibly a nearby competitor. And if that's not an option, then you have to consider the conglomerate acquisition. And as Shannen alluded to earlier, the method of transfer is oftentimes highly impacted by the chosen successor. If it's a child or a key employee, then more than likely this will end up as a stock redemption agreement, and the tax favor goes to the seller. If it's an unrelated third party, possibly the nearby competitor, it may very well be an asset sale, and the tax benefits go towards the purchaser because they're able to redepreciate the fixed assets based on the fair market value at the time of the acquisition.
Dave, you mentioned the difference between a transaction where there's a transfer of the stock versus a transaction that's a transfer of the assets. Could you elaborate a little bit more on that?
Typically, when you perform a tax analysis, you're going to look at both a stock redemption agreement, a stock sale, versus an asset sale. Typically, you're going to find that the benefit goes towards the seller when it's a stock redemption agreement, because the effective tax rate is materially lower than that of an asset sale. And in a transaction with a funeral home, that can be hundreds of thousands of dollars. So as I stated earlier, the identification of the chosen successor plays a key role in the method of transfer, be that a stock sale or an asset sale. So it behooves you to have identified a chosen successor that's either within your family or your employee.
Of course, Dave, a stock redemption agreement has the corporation act as the facilitator of the change in control, but you could also have a stock purchase agreement whereby the seller sells the shares directly to the buyer and the corporation continues.
I may just explain a little bit the difference between the two types of transactions. In a stock transaction, what happens is the entity itself stays the same. The company, ABC Funeral Home, Inc., remains ABC Funeral Home, Inc., and the stock is sold or redeemed, and so the stockholder changes. It's a lot easier transaction. However, some of the risks with that are that you're going to inherit the skeletons in the closet, pardon the pun, as far as any unidentified liabilities, things like that attached to that corporation. But that corporation continues on. From an accounting and tax standpoint, the books stay the same, the tax returns keep being filed. It just keeps moving right along. In an asset transaction, the corporation is selling specific items that it owns. So we're selling the equipment, we're selling the furniture, we're selling the building, we're selling the goodwill. And the seller has a corporation, and that he keeps his corporation, and he only sells the assets. So if I'm buying those assets, I buy those assets only. And like Dave said, my accountant adds those to my brand new books, and I depreciate them from there. The seller, he's sold the assets that he's selling, and then he has to work with his accountant in order to finalize his corporate entity, liquidate his corporate entity, and go through a wind down process and eventually dissolve that existing entity. So the two types of transactions structurally are very different and also different in tax implications. And depending on the situation, either can be correct. And that's why a good analysis is important to make sure, as the buyer and the seller, you've got the proper information on what's best for you.
So if I understand both of you correct, the process would be, as Dave, you said, identify your successor first and then determine the best form of transaction.
Absolutely.
Dave and Shannen, you've both given a great deal of information for the members to absorb, and far more than the few minutes of this video can totally cover. Will you be at Hammock Beach at the IFDF convention if people have more questions and they want to get answers face to face?
Absolutely. I'm looking forward to attending and looking forward to spending time with people. It's always interesting to talk with folks, and they can share their information, share their situation, and hopefully provide them some good guidance. Looking forward to being there.
Absolutely. We'll be at the IFDF Summer Conference at Hammock Beach Resort. And if you are interested, just let me know and we can have a side conversation at a later date.
Fabulous. iSuccession is intended to help the IFDF members be prepared for that day when your business will change hands. This is the largest transaction of your life. In future videos, I'm going to introduce you to more companies and their people that are supporting the IFDF iSuccession program. In the event you have a question for Dave or Shannen, here's their contact information. Of course, if you have a question for me, here's my contact information. Thanks for watching.